How did mutual funds successfully sustain as an investment vehicle for 30 long years? What is the secret and what is the process behind? Industry expert Mr. Gururaj is with us today to enlighten you. Gururaj, the screen is yours.
Whenever you are giving me money, I go and invest either in a equity market or a debt market or a balance kind of something in equity, something in debt. Right. Whatever is that value will be reflected in the NAV. I reduce that expenses while calculating the NAV and declare NAV on a daily basis. And this entire amount is yours. It is not mine. You have given the money, your money is there, I'm giving it back to you. That's all. So today, just look at it this way. If you don't want to come to mutual fund, what you would have done is you would have gone and put some money in post office. You would have gone and put some money in bank FD. Some of you might take that additional risk of investing directly in the stock market. Right? You may do all this. Right? For a minute, let us assume that you don't want to come to mutual fund. This is where you would have invested. Right? Now, the problem with this is you are blindly following something. Right? You are putting in FD because he gives a constant return. And luckily, today we have 5 lakh insurance coverage. So that is what. So you go and put your money for a higher interest in a cooperative bank, you may lose your money. Right? Similarly, when it comes to corporate deposits, you don't know. There are many. I am a classic example. If many of you are from Chennai, you will remember the Alvarpet Benefit Fund and the Rapita Benefit Fund, right? 96, 97 period. Everything collapsed in months' time, right? People are getting 16%, 20%, 21%. Right? Everything vanished in 1 month's time. Why I'm saying is we will not be aware of the risk and we are only looking at the return to invest, right? So very, very important to understand boss what is the risk I'm taking while investing some. So to reduce all these complications only, we say that boss mutual fund is a vehicle. Please understand, mutual fund is not a scheme, it is a vehicle, right? How you will go through a broker to invest in a share market? Mutual fund is a vehicle. So you have almost 40 plus mutual funds today. So you can go through any mutual fund to invest, right? So mutual fund is a vehicle. It is not a separate entity or it is not a scheme or something. Those many people will say where you are invested, they will say I have invested in a mutual fund. You are not investing in a mutual fund, you are investing in a scheme of a mutual fund. These are some of the things I thought I'll make it clear before starting it. So today what is happening here is we call it as a 3-tier structure, right? How it works is it is mainly the sponsor, the trustee and the asset management company. These are the 3 main people. Right? A sponsor is a person who is promoting or starting the mutual fund. He brings in money. He wants to be in this industry. So he brings in money. It could be one person. It could be a combination of people. They bring the money. And what happens is regulation tells that, boss, you bring in money, it is okay. But it is public money. Right. So public money means I need to have trustees. So you form a board of trustees or you appoint individuals who will act as trustees. Right. So trustees are the guys who actually ensure that your money is safe. Right. When I say safe, I'm not saying in terms of principle. The process which is followed, everything is as per regulation or norm. That is what will the trustee do. And the actual working or the actual management of your money is done by the asset management company. Right. So there also you will have board of directors and regulation is ensuring that I will show you as the slides go by also. Because the sponsor only will be appointing trustees, right? Now, if he appoints his own family member as trustees, then it is of no use. So, regulation clearly says that both 2/3 of the trustees should be independent. Right. Similarly, in asset management company, if you are appointing people, 50% should be independent. So, the whole idea is sponsor cannot run the show. Right? He cannot have his own people and say, boss, I'm running a mutual fund. They are ensuring that he is not taking full control of it. So that is a structural, what you say, the safety you have when it comes to mutual fund. Right. Now the second part of it, how safe is my money? Let's make it very. People will always say this because you are giving this advertisement, mutual funds are subject to market risk, right? Please read our offer document. This is something which every person will ask us. Wherever we go, they ask this question. The point is, there is a risk in the investment, which we are saying openly. That's all. There is no other. So we are actually open. We are saying, boss, when you are investing here, there is risk. Be aware of it. That is what we are saying. So it is nothing to take it negative. You are also investing in equity, right? When you are investing directly in equity, are you not taking risk? So risk is there in certain investments. So we are only making it clear. Just don't think that mutual fund means it is like bank where your money will be safe. You will get back your capital. You will get some interest. No, we have to make it So we make it, people sometimes say you are very fast and all that stuff when somebody is reading out. I think we follow whatever regulation is prescribing. So investment means there is risk. Let's be clear. There is, if you say investment, there should not be no risk in my investment, then you have to go and put your money in State Bank of India or probably HDFC or ICICI where money is supposed to be safe. Right? At least the government will not allow it to default. Correct. So safety means you will not get return. Let's be clear. The moment you decide my money has to be safe means you will not get return. And look at this way. Now they have done another step of safety. What is that safety? Let us look at it. Right now, you gave me money. Right. I go and invest in either equity market or debt market or in both the places. Now it is the custodian who will take care of all these investments. Right. Now there also they are making it very clear because your custodian cannot be your man. So you cannot have more than 50% holding in the custodian. Say for example, a Dashi bank can act as a custodian or some other bank can act as a custodian. Basically, the job of the custodian is to ensure that whatever you bought, it has come into your demat account. It will be in the mutual fund scheme account, right? And if you have sold something, it is debited from the demat account. Any dividends or whatever bonus shares, all that you will be monitoring it, right? Now, this is the job of the custodian. Now, another important agency is what we call it as R&T agents, right? Registrar and transfer agent. They are the guys who actually process your application forms, right? What do I mean by it? You fill an application form, be it online or physical mode, right? Now the data is captured. They will allocate units based on that NAV, right? And then what they do is they issue an account statement, right? Now, even this agency has to be registered with SEBI. So they are not trying to bring in somebody from outside. So they have to ensure that this guy can work as an R&D. For example, today CAMS, Carvi, these are all big agencies. Yeah. So YMP level regulation is ensuring that your money is safe.
Thanks for your detailed explanation. Are you in search of a personal guide who can remove the stress of handling your finances? Then please feel free to avail our expert consultation. And also you can attend our webinars to gain investment related insights. Both the consultation and webinar are absolutely free and you can find the link in the below description. Please like and share and do subscribe to Holistic Investment.